Hello everyone and welcome to your Glassnode video report for week 24, 2023. So we have seen a pretty tumultuous week this week with the SEC pressing charges against the two largest exchanges in the space, Binance and Coinbase, back to back. So this is obviously a fairly significant piece of news. It's also something that the industry more or less saw coming for some time. It's one of these things that's been brewing in the background and now it's finally come to light and all the cards are on the table. So what we're going to focus on today is specifically all about exchange flows. We're going to be looking at breaking down the exchange flows in and out, what's going on in terms of the major assets, the stable coins, Bitcoin, Ethereum, what's going on in terms of those two exchanges specifically. And then we're really going to zoom in and focus on the investor reaction on the Bitcoin side, as we always do. So the US regulatory environment is continuing to become increasingly hostile. This is kind of a trend that's been developing over, well, kind of years, but it's really heated up over the last 12 months, and particularly after the whole FTX fiasco. So what we're going to be looking at today is the major asset flows coming in and out of Binance and Coinbase. Really looking at, in most parts, we talk about on this channel that the vast majority of capital comes in via either Bitcoin, Ethereum, or stablecoins. That is essentially the major assets of the market. And given the events of this week, that is more than likely to continue to be the case. We are seeing a net risk off in terms of asset flows and capital flows around the space. So we're going to really focus on two kind of key topics, or maybe three. The first one is Binance and Coinbase. Let's look at their asset flows. What are we seeing going on these small time frames? So really zooming in on 10-minute data here in terms of their total balances and what's been going on over the last couple of days. We're going to look at the reaction on the Bitcoin side from long and short-term holders, really breaking down the exchange inflows specifically to really assess that investor reaction. And what we're going to close out on is a topic of realized profit and loss, which you know that we love to cover on this channel. And something that's quite interesting is it really does suggest that the market is in a position of apathy. And this is a really interesting dynamic that happens not only in Bitcoin, but in all asset classes and all markets. Apathy typically follows a long, prolonged bear market. It's this point in time where it's the slow, grinding, sideways boredom. And that time pain is actually what shakes out a large majority of investors who've held through the entire bear. They feel like they've paid their dues, and then it's just a long, grinding, sideways, volatile pattern that eventually is the thing that shakes them out. So it very much looks like we have entered that regime. And unlike other markets, we can actually see this playing out on chain. So as always, do give us a rate, a share, and a subscribe. It does help this channel get to more eyes, and we really do appreciate it. Make sure you leave your comments in the description below. Just as a bit of a heads up, almost all of the charts that we're going to be focusing on today are in our professional tier, and the reason being that breaking down, when we look at exchange balances, exchange flows, realized profit and loss to exchanges, these are some of our most advanced metrics. There's an extraordinary amount of algorithmic design and all the work of labeling and clustering. So really, this is some of our most valuable data at getting a clean picture, because very rarely does someone send coins into an exchange. Generally, that's going to be based on some kind of a transaction, a buying, a selling, a recollateralization, whatever it is. So the data that flows in and out of exchanges is extremely clean. It takes a lot of work to actually upkeep. And in that sense, this is really where some of the Glassnode magic comes into it, coming down to those exchange labels and what we can then do, bringing our on-chain experience, how realized profit and loss and how all these cohorts and dynamics play out, and bring it to our cleanest data being the exchange flows. So that's really going to be the focus of today. So let's jump right into it. Okay, so here we are in our week on chain dashboard. And by the way, you will find all of these under the category, the week on chain. So if you are looking for these dashboards after the fact, you will actually find these available in the sidebar. So what we're looking at here is Bitcoin and Ethereum. This is on a 1 month view. So what I've done, I've indexed their price. They start at 1, and I've indexed the price of these two assets to 1 month ago. So the reason why I want to do this is compare their relative performance to that standard baseline. So the traces here is essentially showing their overall performance. And you can see that up until into early June, Ethereum was actually dominating. We actually had higher performance coming from Ethereum. Now, down the bottom here, this is the point in time when the SEC launched their charges, kind of the announcement of all of this. And what I've got down the bottom here is the drawdown from that point. So the price chart is showing reference to 1 month ago, so we can kind of see what was going on in the lead up into it. And then our drawdown charts here are essentially showing from the point of the announcement. Now, what you can see is that whilst Ethereum was outperforming Bitcoin, actually, as we led into it in early June, and actually it outperformed it. This was when the Binance charges were filed, and we saw that the prices actually rallied when the Coinbase charges were filed. So really, this is kind of the market trying to price in these events. But as you can see, the Ethereum price has actually outperformed to the downside, and we've actually seen a much larger drawdown since the first Binance charges were laid. So we can see that Ethereum has actually started to underperform Bitcoin. Now, last week we spoke about this capital rotation, how capital was moving higher and higher up the stack from very many metrics. If you did miss last week's episode, I would encourage you to go back and check that one out. I think that's a really important one, especially the capital rotation dashboard. I think it's a really, really powerful tool that we have. And what you can see here is that this looks like we're actually heading further in that direction where capital is rotating back towards the lowest risk assets. And we have to remember, even stablecoins carry some kind of risk in this current environment. Okay, so now what we're going to look at is the overall balance change. Again, this is looking at a 1 month view. So we're quite zoomed in here and we're looking at 10-minute resolution data. So this is the exchange balance for Binance, Bitcoin, Ethereum in blue, and then the aggregate stablecoins, USDC, USDT, and BUSD. Now, the important thing to note here is that we have seen, this is the announcement that went on back here. This is when the SEC launched the charges. All three of these major assets have seen a net decline. So it has been a fairly significant outflow. I think we've seen something between about 6.5% of BTC and ETH of their total balance flowing out. Now, stablecoins were far more dramatic. We actually saw, up until the newsletter was published before this spike here. So we saw 20% of all stablecoins left on Binance were actually flowing out over the course of the last week. Now, interestingly, we've actually seen a significant uptick in stablecoins. So there has been, it looks here, something on the order of about $500 million has actually flowed back into Binance on the stablecoin front. So at the very least, this is a trend to be paying attention to. Now, it is always important to remember, let's zoom out on a 1-year basis here, because we have to put these things into context. Remember, that was in a very, very zoomed in 1 month view. So overall, the total number of BTC is still 660,000. So it's still extremely large amount, 4.5 million ETH. But again, here you can see there's been a macro downtrend of stablecoins on Binance. This is driven in part by BUSD having to enter because of another SEC complaint. Paxos stopped stopped issuing and only moves to redemptions. We've actually seen Binance's stablecoin balance decline by 75% since FTX blew up. So this is probably the major thing to just be aware of, is that the stablecoin flows, whilst BTC and ETH, their balances are declining, but they're still relatively high. There has been a very significant outflow of stablecoins from Binance, driven in part by BUSD, but something to pay attention to. Now, if we move across to Coinbase, we have a very, very different story. Stablecoins, as you can see, over the last month, and indeed following the announcement of the charges, are essentially flat. We've seen very, very small outflows on stablecoins. BTC is only down about 0.5% of their total balance, very, very small. And Ethereum, we saw a significant decline. I think this is about 8%. However, what this looks like is it's likely to have something to do with their staking program. There's something internal that's going on. These coins have left what we call the Binance cluster, but they may not necessarily. They may have moved into Coinbase custody. They may have moved and they're adjusting their staking service. It is one to watch, but overall, Coinbase is seeing a fairly stable flow on all of their coins. So really, it is this downtrend in stable coins on Binance. That's the thing that kind of stands out the most to myself. So that's kind of capturing the big picture view of those two exchanges. Now let's have a look and break down exchange inflows. We're only looking at inflows here. The first one we're going to do is break it down in terms of size. So the red is over $10 million transactions, very, very large. You can see lots of outflows by, in fact, all cohorts, but even these very large transactions following FTX. Now, this obviously scales down. We've then got our 1 million, to 10 million. Then we've got our 100,000 to 1 million, all the way down to $10,000 or below in the light green. Now, what you can see, let's zoom in on a 1 month, just like we looked at before. Maybe that's a little bit too much. Let's go on a 6-month view. What you can see is that our $10 million transactions, this is across all exchanges, $10 million seems to be the net inflows at the moment. And for all of the other cohorts, we've actually seen net outflows over the course of the last week. And this is actually not insignificant. There is fairly substantial outflows going on a BTC sense coming from this particular entity. Maybe actually just drop this onto a USD basis, just to give us a snapshot here on a USD front, because generally speaking, when we're looking at things over a longer time frame, looking at it in terms of BTC or the native token makes more sense because we compare between cycles. On a more zoomed in view, often the USD is the way to go because that's often how people think about their assets. And we can see here that we're talking about, here's our $80 million bar. So we're talking about something on the order of about $50-60 million worth of net outflows. And outflows do continue to outpace inflows. So there's a bit of a divergence. Larger transactions and actually very small transactions are net inflows. And those in between from about 10 million all the way through to $10,000 are seeing outflows. So it's a bit of an interesting divergence that's going on at the moment. Now, here we're looking at total exchange inflow and outflow volume. Now, what's important to note here, there's a couple of things. First thing, note how inflows and outflows actually follow each other very, very closely. This is something a lot of people miss when it comes to on-chain analysis. The reason why we can pull so many signals from on-chain analytics is there are hundreds of millions, sometimes billions of dollars flowing in and out every single day. The net flow may be 2,000, 5,000, 500 Bitcoin, but on total, that is usually something about less than 5%. The net flow, when you subtract deposits and withdrawals from each other, the net flow is something about 5% of the total. So we can see we've seen a bit of an uptick in both deposits and withdrawals, although outflows are about $80 million a day more than inflows. So we are still seeing a net outflow regime, but the scale of this just kind of shows you the overall view. The market has reacted somewhat, but both in terms of deposits and withdrawals in both directions, with actually a preference towards withdrawals. So let's break down these exchange inflows just one step further. In the orange, we have the total exchange inflows, same as the chart above. In the red, we have exchange inflows by short-term holders. These are people who've held their coins for less than 5 months, and more or less, I mean, we're getting into the middle of June now, but more or less, we're talking about 2023 buyers. So what you can see is that most of this uptick, right, this uptick that we can see here, let's actually zoom in on maybe a 5-year basis. So the red is short-term holders. The green are inter-exchange, people transferring from Binance to Coinbase or from OKX to Binance, whatever it is, inter-exchange flows. And the blue down the bottom here, which you can see is typically only active around periods of volatility. These are long-term holders. So what you can see is that most of this uptick appears to be driven by short-term holders. Short-term holders are really driving most of this flow. So that's giving us a bit of a view that most of the people who reacted this week, you can see there's basically no long-term holders. There's very, very little uptick in terms of inter-exchange flows. Most of this uptick is being driven by the short-term holder cohort. So most of them are recent buyers. That's kind of takeaway number one. Now, if we look at that on a percentage basis, this is actually quite interesting. Note how short-term holder as a percent of total inflows is very, very stable. It's been around 60% for some time. Now, this week it jumped up towards 75%. So we can really verify and prove that that uptick is coming from those short-term holders. Inter-exchange flows is typically around 30% of total flows, and you can see that it was the one that essentially gave ground, right? Obviously, because short-term holders were driving it, the percent that's going to be from anything else is going to decline. And long-term holders accounted for, I think it was about 2% if memory serves. So really, this is a short-term holder driven. In terms of the response, it is mostly coming from investors who recently acquired their coin. So that's a kind of a takeaway, and we've got a few pieces of evidence to prove that. Now, these two charts are looking at, in the top view, short-term holders, in the bottom view, long-term holders. So obviously the short-term holder cohort has some portion of coins. So does the long-term. They've got some, I think they're almost at all-time high. Actually, long-term holders is about 14.4 million BTC. So an extraordinary amount, almost an all-time high in terms of total coins. what percentage of that balance are they currently sending into exchanges? And really what you can see here, let's actually start on the bottom with our long-term holders. Note that they're typically most active at market tops and near market bottoms. So this is when they're sending a significant portion of their held balance into exchanges. So 2017 is a good example. They were primary sellers on the way up, typically at these large market peaks. Now, you'll also note that here in 2015, they were also sellers during the disbelief rally, right? This is a period in time when the market, this is this sideways grinding apathy where people have just gone through a multi-year bear market. They finally start seeing any kind of upside and they are giving up as the market rallies. So you can see here, here's again, bull market distribution. You can see that long-term holders are the most active near tops, but also near these large capitulation bottoms. Remember, they can still panic. People have held their coins for a long time. When they see the market absolutely tanking, here's Luna. You can see there's a good example where they just panicked and say, get me out of this thing. So FTX was one of these events. You can see that as we had our first correction down to 19,000 and then rallied to 28, they became active again. This week, absolutely nothing. So long-term holders are really not contributing to the current market environment. In many ways, they're basically sitting put. And if you really look at that from a perspective, it kind of tells you that Bitcoin long-term holders are largely unfazed by this week's news. So there's another piece of information we can take away. So now coming back to our short-term holders at the top here, you can see they've had a notable uptick. Now, these red bars here for short-term holders, these are when they're sending in more than 1% of their total balance. So it's a fairly substantial chunk. And we didn't quite get to 1%. It got to 0.93%. So whilst it didn't flag the red level that we have here, it is an arbitrary threshold. So the more important thing to note is that we can really confirm here that short-term holders are the primary entity sending their coins into exchanges, and overall long-term holders seem fairly unfazed. So in many ways, that kind of speaks to a bit of a de-risking. It kind of speaks to a bit of a panic for people who recently acquired. We also have a lot of coins that transferred hands up here at these levels. So in many ways, it kind of reflects that, short-term concern, short-term panic. But we are not seeing the same coming out of the long-term holder cohorts. It's helping us gauge the market's response and reaction to this week's news. So that's the first two sections. We've looked at the overall balance. We've looked at what's going on in terms of who has reacted the most. It by and large appears to be those holders with $10 million plus, right? So larger size holders, and largely those who are actually recent buyers. Now we can actually further validate this. Here we're looking at the realized profit and loss only on coins sent to exchanges. So now what we're going to do is actually really hone in and say, well, of those coins that were most likely acquired recently, did they come from 15,000, 16,000, 18, 20? Or are they coming, of the long-term holders who are spending, are they those who are in a loss? Are they people who bought recently at 30,000 and are panicking? Because what we're looking at there is that if a coin was acquired at 30,000 and they're then spending at 25, that's and at $10 million size, that's a non-trivial loss that's getting locked in. Likewise, if someone bought their coins down there at 19,000, a couple of months ago and is sending in $10 million, that's a reasonably large profit. So we can start to measure really where did these coins come from? And if they're looking at a large profit or loss, large profits, obviously, typically associated with bull markets and profit taking, but also note this final sell-off that we had back here in July 2021. Massive profits were locked in because people literally thought this thing was going lower. People who had acquired in the previous bear cycle panicked at 29,000 and sold their coins, right? They took a big profit, so they still won, but this shows a reaction function of what we're seeing from the investing cohort. This is barely registering at all. In fact, this is some of the lowest profit and loss that we have seen. The last time we saw this was in the doldrums after FTX. And once all the dust had cleared and we were just grinding sideways into the year's close and the start of 2023, that's the last time we saw this level of apathy. The other time was post-COVID. We had our recovery and then we grinded sideways for several months where just nothing happened. This is peak apathy. We have the same magnitude of profit and loss happening right now as what we saw in those peak apathy periods. The boredom, There's just nothing going on. And it also tells us that most of those short-term holder coins were coming from a price when they acquired it pretty close to where we currently are. So they're not really locking in much of a profit or loss, even though they're sending in $10 million plus transactions. So it really helps us classify that most of the inflows right now were recently acquired up here in this current consolidation range. Now, the last two models I want to touch on. So take that idea of realized profit and loss. It's helping us gauge capital flows, profits, capital and inflows of profits, capital outflows are losses, right? Typically speaking, when the market is volatile and exciting or chaotic and, dangerous in a bear market, people are locking in large profit or loss. In a period of apathy, right? There's just nothing happening. No one's sending coins with much profit. People are just kind of sitting on their hands, waiting for something to happen, right? Waiting for an incentive. Price is the incentive. If it goes lower, people may capitulate. If it goes higher, people start to take profits. But they're kind of waiting for something to happen. So how do we measure that level of apathy? Well, I've got two metrics here. The first one is the sell side risk ratio. Now, this one here you will find in our entity adjusted. This is our entity adjusted variant. You'll find this in the T3 realized profit and loss dashboard. There is also a non-entity adjusted variant for advanced members. So you'll also find a variant of the sell side risk ratio in the realized profit and loss dashboard. So what we're comparing here, let's take all the realized profit and all the realized loss, add them together. We don't care about subtracting them. We're adding the total amount of value that was realized, and we're going to compare it to two different things. In this metric, we're comparing it to the realized cap. So the other way to think about this, how much profit or loss is the market locking in relative to the market size? The next chart we're going to look at is how much profit or loss are we locking in compared to the transaction volume. So two different baselines. The first one is basically looking at how much compared to how big Bitcoin actually is. We are plunging down towards all-time lows. When do we see an extremely low amount of realized profit or loss relative to the market size? Well, we saw it back here in 2019 and 2020, right? Peak apathy. We've just gone through a whole bear market. We're down 80%. We finally recover and we return back into another bear market. There are very, very few investors who make it through this process. Those who remain typically are the high conviction holders, and we reach a point of apathy where they're just simply not willing to spend, hence a low sell side risk ratio. We saw it here in late 2015 and into 2016. Same thing, this long, sideways, multi-year grind of just absolute boredom. And here we are, following FTX, we entered that period of absolute boredom. So even though we're still up about 50% off the lows, we are still in this period of sideways, apathy, and complete boredom. So it gives you a bit of a scale that we can actually observe these investor cycles based on their behavior patterns. And really what we're looking at here is a very much 2019 style sideways. I mean, granted, it's sideways and we had March 2020 and this thing was still a miniature bear market. So it can be volatile. But in terms of the investor behavior, this is really the kind of the hangover from the bear market, the long, slow, sideways boredom that you look back on, right? When you look back on it, you go, well, really, it chopped around, but we didn't actually go anywhere, right, for that whole period of time. Same as 2015 and 16. So to close out, if we then do that same exercise, we compare it to transaction volume, because transaction volumes are also falling off a cliff. So quite often our realized cap will kind of reach a plateau during a bear market because there's not much profit or loss, so it's not changing very much. Transaction volume tends to fall off as awareness dies away, investors leave, there's less network activity, there's just, generally speaking, the network is less alive, and there's less coins flowing around. So again, very, very low values that we see down here are occurring during this 2015 and 16 apathy phase. Same here in 2019. Low values during this apathy phase. Now, what's really important for an RVT ratio, when we compare it against transaction volume, generally speaking, the trend is more important than the absolute value. So you'll see here that some of these values go below the red line. The red line is arbitrary. What matters is the trend. The downtrend here is kind of attention and awareness dropping out of the market. Awareness is dropping out of the market. This is kind of that apathetic type phase. we have been in a very, very strong downtrend ever since FTX collapsed. And what that really tells us is that of all the coins that are moving, very, very few of them are locking in a meaningful profit or a loss. And generally speaking, that indicates that the hodlers aren't doing anything, which we saw in the long-term holder supply. They're pretty static. And most of the coins that are moving were recently transacted. And the way that Bitcoin tends to behave, until all those long-term holders essentially just soak up all the coins, which takes time and it's boring and it goes sideways, until that happens, right? And it shakes out all of those final capitulation holders who just, they can't deal with the time pain. That is essentially what this process looks like. So we have a very strong downtrend in this metric telling us that apathy is in play, and a very, very low value in the sell side risk ratio telling us much the same. So thanks for tuning in for that session, folks. Hopefully you found that useful. Really interesting time. Really, it's quite hard to read what's going on because, we've got regulatory pressure on one side, we've got apathy happening on the other side. But when we really break down what happened this week, and make no mistake, the gravity of the suits that are charged by the SEC, they're quite significant, right? The two largest exchanges. This is a big deal. But when we actually look at it from the Bitcoin perspective, by and large, it really looks like the liquidity just continues to drain out of the market. It looks like capital continues to flow higher up the risk curve, right? Getting away from that risk. And what we are seeing is that for Bitcoin long-term holders, by and large, at least based on their behavior on chain, they really seem very unfazed. This kind of seems unsurprising to them, and there's been very, very little reaction. The largest majority of transaction activity appears to be coming from people who recently acquired their coins. And of note, as this chart shows, a lot of it is coming from coins that are $10 million in size. So really that's speaking to a bit of an institutional risk that's coming in, right? There's going to be a bit of uncertainty around that institutional capital now that the two largest exchanges are being taken to court by the SEC. So hopefully that's a useful session. Let me know if you've got any comments or questions in the comments below, and I will see you in the next one. Cheers.